Hey traders, in this video, we're diving into SPY, QQQ, and IWM to identify the exact levels that will determine whether bulls or bears take control next week. These are your critical trigger points, so make sure you stay until the end. Let's get right into it. I'm gonna make this really easy for you. SPY is bullish above 582.66. That's the 38.2% Fibonacci retracement from last week's sell-off. If price clears that with strength, we could see a rally up to the 50% fib at 584.62 and possibly the 0.6118 Fibonacci zone around 586.56, which aligns with heavy volume nodes. This area could act as a magnet in a short squeeze. So remember, SPY is bullish above 583.50. That would reclaim the key gamma zone and could spark dealer hedging back toward the 590s. Now, on the flip side, SPY is bearish below 574.78. That level sits just above the 200-day moving average and has acted as near-term support. A clean break below it opens the door to 573.25, and from there, things could accelerate quickly into the low 570s, especially with gamma flow pressure below 575. If 575.50 goes, the next stop could be 568, and honestly, there's not much gamma support under 575. It could snowball fast. Weekly MACD is stalling just as RSI flattens out. It's a classic inflection setup. Watch for volume confirmation. Low holiday volume could be a trap. Bullish above 514.20. That's last week's high. If bulls can reclaim that level, we may see a fast move to retest the prior high at 523, especially with MACD still in positive territory on the daily chart. A breakout above the 514.20 level could trigger a run back toward the 520 zone. Why? That's where it failed last time, and it lines up with heavy volume node resistance. Bearish below 505.50. A close under that 20-day moving average sets up a drop to the 50-day around 496.50. Weekly MACD just turned back down and volume picked up on Friday's drop, suggesting sellers are in control for now. A close below the 505.50 line opens the door to 500. And under that, the 50-day moving average around 496 becomes the next line of defense. This zone is sensitive to rate and tech sentiment. Keep an eye on semis and yields. We need to always keep an eye on the Russell 2000 because small caps, IWM, are more sensitive to credit conditions, liquidity, and investor sentiment. When markets are risk-on, they usually outperform first, and since small caps often rely on domestic revenue and higher leverage, they tend to respond earlier to shifts in growth, inflation, and rates. Broader participation, when IWM leads, often supports the sustainability of a rally. When IWM lags or breaks down, it can signal cracks beneath the surface. Even when SPY looks fine, what small caps are telling us right now is while SPY is testing the rising 20-day EMA, IWM has closed below the 20-day and is underperforming the major indices. While this isn't a guaranteed crash signal, it's definitely a red flag for bulls. If IWM can't reclaim its 20 days soon, or worse, loses the 50-day, then yes, that could be foretelling downside in SPY and QQQ. Think of it as a canary in the coal mine. Bullish above 205.49. That's the 20-day EMA. If small caps can reclaim this level, it could trigger a momentum chase back toward the 210 to 213 resistance zone. The bears will really get squeezed if IWM can push above 206.25. That clears the 50-week EMA and the last failed breakout attempt. If it sticks, we could be looking at a push into the 209 to 213 range, bearish below 109.960. That was Friday's low and also just above the 50-day MA. Lose this, and we're likely headed to retest 197.50 and even the 200-day moving average near 193.98. So, remember the Russell 2000 is bearish below 199.60 A daily close under that level would confirm a failed breakout and likely trigger a slide toward 195 or even 193. Volume on Friday was pretty weak compared to the recent rally, and MACD on the weekly is losing steam fast. MACD is crossing down on the daily, and volume confirms the weakness. If SPY and QQQ roll over, IWM may lead the downside. If you found this analysis helpful, smash that like button and consider subscribing for more breakdowns just like this. Let us know in the comments, are you leaning bullish or bearish this week? This isn't about predicting, this is about reacting. Let price show its hand. Each ETF has a clear battle zone. We're not guessing here, we're preparing. Whether you're managing long exposure or timing puts, the roadmap is right here. If you found this helpful, do the algorithm a favor, like, comment, and share this with another trader. And if you're ready to start trading with precision and get a live alert each time we place an options trade every day, check the pinned comment for access to my private group. See you on the next candle. For trade alerts and deeper insights, check out the link to our group in the description below. Thanks for watching, and trade smart.